Ladies and gentlemen, good day and welcome to the Antony Waste Handling Cell Limited Q3 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jose Jacob, Chairman and Managing Director. Thank you, and over to you, sir.
Good afternoon and thank you for joining us for our Q3 FY24 earnings conference call. With me I have Mr. Mahendra Ananthula, Group President, Operations, Business Development and Diversification. Mr. Subramaniam, our Group CFO, and HGN, our Investor Relation Advisors. Our investor presentation for third quarter 2024 is now available on the website of the stock exchange and also on our company's website. In our third quarter, we clocked core operating revenue reaching rupees 193 crores, marking a strong 22% year-on-year growth. This growth can be attributed to several factors, including escalation in tipping fees and improved revenues from fixed shifts, trips, and household fees. Furthermore, the initiation of our CNT project at Panvel and the start of sale of power sales from our WT project have begun to contribute positively. The bulk of our capex is behind us and hence the drop in indirect revenue. With this shift in our revenue mix, the driver of our margin is now being led by core operating revenue. This is evident from our improvement in EBITDA margins, which jumped by 690 basis points to attain 22.3%. The third quarter of FY2024 core EBITDA margins meet our expectations, boosting confidence in our stability and long-term growth. On the corporate side, the company has submitted scheme of merger with the NCLT, which entails the absorption of two of its wholly owned subsidiaries, namely Antony Infrastructure and Waste Management Services Private Limited and KL Envitech Private Limited into AG Enviro Infra Project Private Limited, a subsidiary fully owned by the company. The primary objective behind this strategic move is to rationalize and simplify the organizational framework, thereby enhancing operational efficiency and facilitating better management oversight. Thank you, and now hand over the call to Mr. Ananthula, our Group President, Operation and Business Development. Mahendra, over to you.
Thank you, Jose. I'm pleased to present an update on our operational performance for the third quarter of FY24. During this period, we effectively managed 1.18 million tons of waste, demonstrating a notable 13% year-on-year increase. This growth can be attributed to the successful execution of operations in newly acquired contracts, improved volumes at existing collection and transportation sites, and an uptick in tonnage processed at our waste processing operations. Specifically within the CNG business segment, we handled 0.48 billion tons in quarter 3 of FY24, marking a significant 19% growth compared to the previous year. Furthermore, our waste processing business managed 0.70 million tons, representing a commendable 9% increase over the previous year. During this quarter, our refuse-derived fuel, which is commonly known as RDF, sales reached a new milestone, totaling approximately 47,000 tons. This signifies a substantial improvement compared to around 15,500 tons in the same period last year and around 25,000 tons in quarter 2 of FY24. Additionally, we sold around 3,200 tons of compost during the quarter, compared to about 1,700 tons sold last year. It is worth noting that the sales volume of compost was softer than expected due to lower uptake of fertilizers in the states of Maharashtra and Gujarat, primarily due to the weaker than expected monsoon in this region. A significant achievement this quarter was the commencement of commercial power sales from our waste-to-energy plant to the Pimpri-Chinchwad Municipal Corporation. We are pleased to report that during the first 3 months of operation, the plant's performance has met all the technical and operational parameters as defined satisfactorily by our Japanese technical partner, Hitachi Zosen. Currently, we are supplying approximately 8 megawatts of power to PCMC's water pumping station in Ravi and the sewage treatment plant in Charoli, lowering their monthly power bill. Over the remainder of this fiscal year, our aim is to steadily achieve PLF of 85 to 90%. We are also in the process to onboard additional PCMC's assets for full utilization of power generated in our waste-to-energy plants. On the ESG front, in terms of emissions, our Scope 1 emissions totaled about 6,348 tons of carbon dioxide equivalent in Quarter 3. Our Scope 2 emissions increased to 1,405 from 625 tons in Quarter 2, reflecting increased biomining and shredding activities. Our commitment to emission reduction is evident with avoided emissions of 2,559 tons in Quarter 3 as compared to 1,260 tons in Quarter 2. Currently, our ground staff strength stands at 9,781, with a sequential increase reflecting the commencement of the Panvel CNG contract. We remain proactive in pursuing opportunities in CNG, biomining, and waste processing projects, underscoring our firm commitment to sustainability and creating value for our stakeholders. Our operational excellence is exemplified by the prestigious rankings bestowed upon the cities we serve, as demonstrated by the recent Swachh Bharat survey. These remarkable accomplishments are thoroughly outlined in slide number 13 of our investor presentation. In conclusion, these accomplishments underscore our steadfast dedication to environmental sustainability, innovation, and the creation of a better, greener future. Our company remains committed to growing sustainably while promoting a clean environment. In the coming months, we eagerly anticipate achieving important milestones, including the commissioning of our construction and debris processing project in Mumbai and expanding power sales to the waste-to-energy plant in the Pimpri-Chinchwad region. Onto the financial aspects, let me get NG involved here. NG, over to you.
Thank you, Mahendra. The standout feature for the quarter lies in the transformation of our revenue mix, signaling the nearing completion of the capital expenditure phase of the group. In the third quarter of financial year ending March 2024, the company achieved significant growth with operating revenue rising to 193 crores, which represents a robust 22% increase compared to 158 crores in Q3 FY23. Sequentially, the core operating revenue shows a softness, and this is mainly due to the recognition of 14 odd crores of escalation booked in second quarter for the past period. Adjusted for this one-time escalation benefit, sequentially, the total reported revenue is still up by 12.3%. On a 9-month basis, the company has reported an operating revenue of around 570 crores, reflects a substantial 20% increase on a year-on-year basis as compared to 474 crores for the 9-month period last year. This impressive growth in operating revenue can be largely attributed to a substantial increase in volumes handled, the successful acquisition of the Panvel project, and the escalations materializing in the last 3 quarters. In Q3 FY24, the total tonnage handled reached 1.17 million tons, which reflects a 12% growth over the previous year. For the 9-month period, the total tonnage stood at around 3.52 million, which reflects a growth of 12% for the same period last year. In terms of consolidated EBITDA performance, the group demonstrated a significant growth of 45%, reaching 50 crores in Q3 FY24 compared to 34 crores in Q3 FY23, accompanied by an impressive EBITDA margin of 22%. This marks a noteworthy increase of around 690 bps from Q3 FY23. However, on a sequential basis, the margin appears softer, primarily due to the reasons stated above, which is basically 14.8 crores of past escalation being materializing after a delay. When adjusted for this factor, the second quarter's EBITDA margin would have been around 18.1%, and this compares against the Q3 Q4's EBITDA margin of 22.3%. For the 9-month period ending December 2023, the company exhibited a robust 23% in EBITDA, reaching 158 crores compared to 129 crores for the same period last year, with an EBITDA margin of 23%. This demonstrates a remarkable increase of 400 bps on a year-on-year basis. A word on the other expense line item. The total other expenses has risen by 17%, primarily driven by 96% increase in RDF transportation cost, which came in at around 10.9 crores. The other components of other expense line item, namely power, fuel, and vehicle hiring costs, came in at around 34.6 crores and 24.3 crores respectively. Interest expenses have jumped from 6 crores last year to 11.4 crores in the last quarter, while depreciation has risen by 58% year-on-year. These increases are primarily attributed to the commercial launch of the waste-to-energy plant. Despite these factors, the pre-tax profit for the quarter has risen by 24% year-on-year, reaching 23.2 crores for the quarter. However, despite the uptick in the pre-tax profit, the rise in deferred taxes has exerted a pressure on the PAT number, which has come in flat at 15.6 crores. The deferred tax has increased during the quarter due to increase in undistributed profit at the subsidiary level and also due to a deferred tax liability at our renewable energy waste-to-energy plant as new assets are being capitalized. As of December 23, the group's gross debt stood at around 383 crores with a net debt of around 330 crores, indicating a net debt to equity of 0.5x. The weighted cost of debt for the group stands at 8.8%. The company remains steadfast in its commitment of bolstering operational efficiency, enhancing liquidity, and cultivating a favorable financial landscape. During the quarter, one of the large subsidiaries of the company has been upgraded by CRISIL by a notch to A- with a stable outlook. Similarly, the waste-to-energy project has also started being initiated at an investment grade by the rating agency. Given these parameters and the upcoming projects, the company is sure of achieving a sustainable 20-25% CAGR rate in its core operating revenue outlook. That's all from our end, and now we open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Faisal Zubair Hawa from HG Hawa and Company. Please go ahead.
The financial results, keep on showing a very big, up and down in as far as the EPS is concerned. So how can we really, stabilize this? And it is, becoming more and more difficult to understand the figures each quarter. Particularly, there's a huge variation in each quarter. That's one. And second is, sir, what is the kind of revenues we are now expecting in quarter 4 from the Pimpri-Chinchwad project? And what is the kind of EBITDA? Has the project even stabilized?
Good afternoon, Mr. Hawa. So, the volatility in the earnings is primarily because of lack of clarity and directions and decision-making at bulk of our clients' end. Since most of our clients don't have elected members, there is a significant delay in decision-making process. As a result, there's a lumpiness of escalation getting recognized and being passed on. So that is why you are seeing a significant jump in recognizing these escalations, which has been seeing in the EPS kind of changing in the last 2 or 3 quarters. Answering to your second point.
Yeah. So on the second point about the PCMC's waste to energy, I mean, we are pleased to disclose that in the last few weeks, especially in the last 3 weeks, we have been running the plant at full load of 14 megawatts, which basically means that we have maximized our power generation capability and the plant is functioning well. And that's why, which reflects in a very healthy power load factor of 99%, and I'm talking the last 21 days data. So going forward, in the next listing, we expect to achieve 85 to 90% of PLF, right? Which I think is a great achievement or a great target to have in the first year of operations.
So what kind of revenues can we get in quarter 4 from there?
Typically if you see the revenue model for this from the power sale, 14 megawatt is the generation. You take out, let's say you at an average, if you work on an ELF of 15%, 15%, and then an auxiliary power of about 12%, the average billing would be for 11 megawatts of power. Okay, so that's going to be that's going to be the build volume.
Okay. And what is the kind of luck that we could have with the Supreme Court in this quarter? Whatever case come up for hearing, because that 10 to 11 crores is always hanging in balance.
The date, unfortunately, have been postponed again. We have got the date of February 26th from the Supreme Court. So as and when the case comes for hearing, we will be taking it up from there.
And you feel that the construction, the collection program also could start in this quarter?
The C&D contract is expected by 1st of April. The construction phase, the establishment of the assets, everything is ongoing. So we expect the approvals and everything to be in books by the end of the current financial year. Commercialization of the project is likely to start from the first quarter of the next financial year.
And sir, on a per unit basis, are we profitable in this RFP that we send to the cement companies, or are we still making losses on each unit?
So we are positive. There's a positive contribution because what we are looking at is that after adjusting for the transportation cost, we need to make a positive contribution. So on that,
are we earning anything on each truck that we send to the cement companies?
Absolutely. On each ton of RDF that we are selling, we are
having a positive contribution.
We are having a positive contribution.
Okay, because it is tending to bring down the EBITDA every time the volumes go up on this front.
Mr. Hawa, there is a combination of revenue contributors and the margin contribution. Sale of RDF, though, is a very bulky item, it is a low margin business. So that is why the weighted average of EBITDA margin drops in. But on quantity terms, if we look at one volume and on value basis, it adds to the bottom line.
I appreciate you answering my question so well, sir. Thank you.
Thank you. The next question is from the line of Nirav Dalal from Maybank Investment Banking Group. Please go ahead.
Yeah, thank you for the opportunity. A couple of questions. First is, can we get a PBT for the Pune project and for ex-Pune? Because I think that will give a better indication in terms of how the performance is shaping up, at least on the PBT side, obviously excluding the one-offs that we have in terms of collection and all of that. So is that possible?
Yeah, currently we don't give segment-wise information because none of these projects provide more than 10% of the revenue or of the profitability or the capex. So, we don't normally disclose the segment-wise information and the contribution of those projects.
No, where I was going to was that because depreciation and interest cost would have been higher just because we've capitalized the waste-to-energy project, right?
Yeah. So if we were to ask the depreciation cost and interest cost of the waste-to-energy project, on a thumb rule basis, I think the cost of interest, annualized interest is in the range of around 13 odd crores. Depreciation would be in the annualized range of around 17 odd crores.
Okay, got that. The other question I had was for the waste to so our average cost interest cost as you said is down less than 9%. So is there a possibility that we can rework the waste to energy project debt, because I guess we've taken that, it's been taken from PFC at 12.15%. So is there a possibility of anything?
There is definitely a possibility of refinancing this, but based on the performance and the rating that we have got, PFC has already reduced the rate to around 10.25%.
Oh,
so the cost of borrowing has already come in to lower levels. But after 2 years of successful performance and once the cash flow comes in, our ability to get it refinanced will be much stronger and much easier for us to sell than the way it is today.
And just last question. In terms of the RDF and all of that, what would be that as a percentage of revenues?
Less than 2% of our total revenue. I mean, it's significantly small pie.
Significantly small. Okay. Thank you.
Thank you. Ladies and gentlemen, we request you to please restrict your questions to 2 questions per participant. You may rejoin the queue for follow-up questions. The next question is from the line of Soumitra, an individual investor. Please go ahead.
Hello, am I audible?
Yes, you're audible, sir. Please go ahead.
Yeah. So quickly, I've understood the interest and depreciation part. So this is something that will continue for the next quarters also, right? Just to offset that, what would be required is probably those assets giving you value and your revenues going up. So if I may have missed this, if it's already been answered, I just wanted to understand what kind of revenue, not only core but cumulatively the entire business, what kind of revenues can we expect in the coming quarters?
So we are comfortable on the core revenue part. I think we would be looking around 200 to 220 crores based on the existing kind of projects that we have. Going forward, I think with the construction debris processing contract kicking in the next year, that gives us a visibility of around 18% year-on-year growth for the entire group. And this is at the core operating section.
Okay, so basically what we are saying is at least 20% growth is something that, or 18 to 20% growth is something that we can expect year-on-year from the company.
Yes.
That's on the overall revenues, right? Not
That's on the overall revenue, not on the project specifically.
Yeah. Just one thing is, actually it's a little confusing. Your business is a little complex, and just understanding which moving part is going where. So you talk about core, then there are certain non-core activities. So it becomes a little difficult to understand what would be the revenue projection, and hence specifically, if going forward you can just provide some kind of a view on the overall. I'll tell you why the reason is. So I am an HNI who has been interacting with a lot of people, not only in this country but outside. There is a lot of interest in businesses like you. And I feel it is terribly undervalued just because of certain aspects of communication and clarifying what exactly is the business. This business does not deserve the valuation that it is currently having. It deserves much better. These are the businesses globally people are looking at and figuring out and wanting to enter because this is the future. Now the only question is, can we expect from the management to provide, because see, you have to understand people are not as engrossed in the business as you guys are probably, and they would require a simplified understanding of the business. So if that is something that can be done, I see wonders happening for this particular business. So if this is one request from my side, and this request is basis interacting with multiple people across different countries.
I appreciate this point of view, but if you were to look at our investor presentation, if I can draw your attention to slide number 25, It actually spells out our revenue contribution, what we call as core operating revenue, which is our revenue from collection and transportation and from waste processing. That is my core operating revenue. After that, we have a line item called contract and others, which is what our indirect revenue is. So when we talk about a 20% growth in core revenue, I'm actually giving a number every quarter about what we are talking about. Similarly,
go on.
And similarly, when we talk about EBITDA margin and core EBITDA margin, we strip out the indirect related revenue and indirect related cost, and we say this is what we're talking about. My reported EBITDA is, say for this quarter is around 49.7 crores, but my core EBITDA, which strips out my indirect accounted revenue, project revenue, this is 49.3 crores. So I actually split out my revenue potential, my core revenue, my core EBITDA, and this is there in slide number 25.
No, my suggestion only comes from the perspective that everyone is looking for such businesses because this perfectly falls into the ESG category. And if you realize there are a lot of funds across that are looking for such businesses, and it's an appreciation that if somehow it can be properly communicated. I understand even the first person found it a little difficult to understand how the revenues are functioning, etc. If there can be some improvement in terms of how the communication is done about the business, I feel this business has a lot of value. And I think that is appreciation towards you as a management who are in this, who identified at the right time and are working in the right business. It's just, I don't know why, but I just feel there is a lack of awareness about this business across.
Sure. Thanks for the question, sir. We will look into it and we'll try to improve our line of communication.
That's the only thing. Everything else good.
The point is well taken. Yeah.
Thank you so much.
Thank you. The next question is from the line of Utkarsh Somaiya, an individual investor. Please go ahead.
Thank you for the opportunity. I had a question regarding your accounting again. So in your core operating revenues, which is 193 crores, the waste to energy project, which is just commissioned, is a part of this. Am I right?
Yes, that's part of the MSW processing.
Right. And the contract and others, why is there so much volatility in that number?
This is reflective of the capex that we have done. So in the past, if you see the last 9-month details, it was for the previous year, it was 192 crores, and for this last 9 months, it's around 100 odd crores. This is primarily because as and when we do the capex, the same line item gets reflected as contract revenue. So once the construction period is done for us, the contract revenue falls off, and that assets, once it's put into use, gets reflected into my processing or a C&T line item. So this is as per the accounting standard norms, wherein assets are not owned by the company. These are deboot projects. So hence I need to recognize them using these kind of methodology, and it flows through my income statement and then sits as either financial assets or as intangibles in my balance sheet.
So is there any way to make this a little more predictable for investors?
Because we would be very happy to do it. For that, I would like to go back to my old Indian accounting standard, which is simply whatever you own, you put it in land, bank, and plant and machinery, and there is nothing to do with this accounting standards. I will be very happy to do it because it is a nightmare just to explain internally and to my bankers and financiers, this is my core earnings, this is my accounting adjusted earnings. Trust me, this is something that we always bother. But the fact is, today, with Q3 and Q4, maybe part of Q4, I would say, all my construction phase is almost done. So I will not be having significant contract revenue line item going forward. All of the revenue would be predominantly be driven from my core activity of processing and handling waste.
So we'll just go down to almost zero now from Q4.
Request you to please rejoin the queue for follow-up questions. Thank you. The next question is from the line of Jishan Singhi from Krijuna Research and Analytics. Please go ahead.
Hello. Hello, am I audible, sir?
You are audible,
yes.
sir. Please go ahead.
Okay, thank you for this opportunity. First, I would like to ask that if we see on the quarter-on-quarter wise, your profit has been impacted nearly by 50%. So what could be the potential reason for that?
During second quarter, we recognized around 14 odd crores of escalation of a past period. That got approved in the second quarter of FY2024, and hence there was a significant increase in the second quarter's number. Now, if you were to strip out that, then my margins on a year-on-year and a sequential has improved on that basis. So this is just the lumpiness coming in because of the administrative lapse in the past, which got rectified in the second quarter.
Okay. And my next question is on the construction debris that you mentioned in your last call. I would like to know more about that. That means, is this a new segment your company is entering into, or and how it can contribute to your top line further going ahead?
Yeah, so this is our first project in the construction and debris processing segment. And there are two revenue streams. There are three revenue streams in this. The first one is...
Hello, sir. It's not audible from your end. Can you please more clear?
Yes.
I think there is an audio issue at your end. If you can kind of mute yourself, then do that.
Am I audible now?
Yeah. Now it is audible, sir. Yes, sir.
So what I was saying is that yes, this is our first C&D contract. There are three revenue streams in this project. The first one is for the collection and transportation of construction debris from the suburbs of Mumbai to a processing site. this processing fee has got a rupee per ton kind of tipping fee, which is payable by BMC to us. The second revenue stream is basically by the sale of the value-added products that we would be selling, which is the sand and aggregates and things like that. So these are the two broad revenue streams of this project. Both these will add to our processing revenue.
Okay, so in percentage of revenue...
We request you to please rejoin the queue if you have further questions.
Okay.
The next question is from the line of Shriyansh Jain from Arthya Wealth and Investments. Please go ahead.
Yeah, thank you for the opportunity. I just want to know, protests are going on in Delhi, Noida, and you have collection transportation contracts there. So is there any operational effect that you receive from that protest and all?
Sorry, can you please repeat the question?
How does the protest which are currently going on in Delhi or Noida side, so how does it affect your operations of collection and transportation which are in Delhi or Noida side?
If you can just step a little back because the mic is probably too close.
Hello, am I audible?
You are audible, but somehow not very clear. But maybe you can try again.
Yeah, now I am audible?
Yeah, sure.
Yeah, so I was just asking about the protests which are currently going on in Delhi or Noida side. So how does it affect, or is it affect your operations of collection and transportation which are going on in Delhi or Noida side?
Are you referring to the ongoing farmers' agitation?
Yeah.
It's too early to say because this agitation actually started technically only yesterday or probably today. It's a bit too early, but Noida, as of now, there is no effect. Delhi also, there is some restriction going to the landfill listing, but all in all, there is no effect on our business, in terms of collection or waste or transportation.
Because if any problem in transporting the waste to your main central point, then will it not be an issue to you?
Not really.
Currently, we are working out of Karol Bagh area, so there are no great impact because of these strikes in that region. And the dumping ground or the waste processing sites are away from the places where the strikes are going on. So we don't have any impact on our operations.
Because the so-called agitation is only at the border. Because what we understand is that the Delhi government or Delhi police has stopped these farmers or have these entry points checked. Right? So, but all our operations, our collection points, transportation routes, and the landfill site or the processing site is within the city limits. So we don't envisage as of now any impact on our operations.
Okay, and one last question, if I see your CNT revenue, which was in last quarter 152 crores, and in this quarter it's 139, 140 crores. So why there is a fall in it? Instead, you also told last quarter that on 1st November, your Panvel collection and transportation contract is going to start. So it should add your revenue, and there was no other expiry date of your contract. So why there is a fall in collection revenue?
Yeah, so last quarter, that is second quarter of 152.4 crores of revenue, we had around 14.8 crores coming in as escalation for the past periods. This was for the past 6 quarters. So there was a lumpiness there coming in. So if you were to look at my steady state of Q2 CNG operation, the number would be around 138 crores. So it's not a significant decline at those numbers, primarily due to escalations being booked in Q2. That is why you're seeing an 8% sequential fall there. Also, in the current quarter, Mangalore and Thane are kind of getting under the extension mode. So there is some kind of a offset in the tonnage coming in. So CNT operation on a peer-to-peer comparison is still flat to at best positive, sequentially.
Yeah, there should be some growth, right? Because Panvel contract has also been added, so it should add your revenue, like you said, 420 tons per day you are collecting there. So it should add some revenue. Why flat that?
So we started Panvel operations from 1st of November. So we have only 2 months of operations in the reporting quarter. And the ramp up of any new project doesn't happen at full 100% capacity. You slowly ramp up your operation from ward and then scale it to 100% of the area to be covered.
Yeah, more so because in the case of Panvel, unlike most of our CNT contracts, it is the responsibility of the corporation to give us vehicles. So this handover of vehicles happen over a period of time. So it's only in January when Panvel actually handed over the entire fleets to us. So that's why in the November, even though technically we started the contract in November, the full impact is not visible in the numbers.
Okay. And is there any solution that, like escalation clause you said you are adding to your CNT revenue, because this will make our revenue much volatile, because which hearing will be resolved at which quarter we investor would not be able to know, and which this would create much volatility in your CNT revenue. So is there any kind of solution or anything?
So currently, as per the tender, the escalation is either annual or quarterly. But because of the absence of elected members, there are no rigors being processed by the administrative group. So for the foreseeable couple of quarters, there is likely to be some lumpiness in the revenue recognition, because currently we are not recognizing any escalation in the contract which has not been approved by the client. So as and when the same gets approved, we would like to bring it into the books. So till that time, we cannot recognize them on notional basis.
Okay. Thank you so much.
Thank you. The next question is from the line of Dhruv Shah from Dalal and Brocha Stock Broking Private Limited. Please go ahead.
Hi sir. Thanks for the opportunity. Sir, just wanted to understand what would be the Ind AS impact on the interest and the depreciation part in this quarter in particular, because I can see that in September we had this 32 crores of right to use of assets which was created. But I don't think so that similar impact had come in Q2. The majority of it has come in Q3. So if you could just give a bit of detail on that, sir.
So I think the total assets that have been incrementally added in the Q3 portion would be not more than around 14 odd crores, which forms part of the contract revenue. So that is a bit of it. Because if you look at the project expense component, that's just 5 crores as compared to 36 crores in the year ago period. So bulk of the assets have been booked in and everything is done. This was just a timing from the independent engineer to certify the bills that is getting recognized in the third quarter.
Okay. So, but in interest and depreciation in particular, what would be the impact of the Ind AS?
That won't be significant here, because this is the first quarter wherein the PCMC's assets have been put to use. So the incremental hit would be in the range of around 3 crores in terms of depreciation, and in terms of interest cost is less than 2.5 crores. So that is the incremental impact that you can see.
Okay, and so the rest of the interest is the increased cost, or what is any other reason for that?
There's also the increase in cost due to the pull down of debt at 2 or 3 sites where we have incurred the capex support vehicles at Panvel, for example, and at Nagpur and other sites. So incremental capex at a Kanjur project and CNG operations is the reason why there is a slight increase in the interest cost. Additionally, the cost of interest is slightly inched up over the last 3 quarters, so that is also kind of weighing on the numbers.
Okay, sir. Got it. Thank you.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello.
Sir, you are audible. You may proceed, sir.
Yeah, I think I missed the number for interest and depreciation normalized for our waste to energy plant going ahead. What was that number?
Yeah, on a steady state of operation, my depreciation on waste to energy would be around 17 odd crores. That's on for the full year.
17 crores. And what would be the interest?
Interest would be around 13 odd crores.
13 or 30?
13.
13. And what was the revenue this quarter from the plant?
Revenue from the waste to energy plant in the current quarter, that is Q3, was around 6.2 crores. And that is just because we started the operations. We have less than around 60 days or 70 days of effective operations, and we tested the plant right from 30 PLF to 95 PLF and everything. So we have recognized just around 6.9 crores or 6.2 crores, from the waste to energy project in Q3.
What kind of monthly run rates did you see in this plant, given that you all had operated the last 3 weeks at almost 90% PLF?
Just to add, talking about a 6.2 crore revenue, that's only from the sale of power. Over and above that, we also have revenue from the tipping fees, which is payable by PCMC to us for the incoming waste. So that's an additional revenue.
So what will the steady state tipping fees plus sale of power, let's say when the plant is operating 85% to 90% PLF?
It should touch anywhere between 12 to 13.5 crores. This is a very conservative number based on a 80% PLF and with load factors and an auxiliary consumption of around 14%. So that is the number that they're looking around. I mean, this the numbers for Q4 would actually give us a benchmark on how the steady state of affairs is likely to be.
12 to 13 crores is on a quarterly rate or a monthly rate?
On a quarterly rate.
Which includes tipping fees plus sale of power?
Yes.
Okay. And what kind of margins you will be making on this business? Because it's a typically high margin business, right?
Yes, it's normally a very high margin business. So this is like any processing contract will be around 40 to 45% kind of an EBITDA kind of number. It can even be better depending upon the auxiliary power consumption stats and everything. So that is why the Q4 would be the first quarter where we have the basic numbers about what kind of rated capacity, the aux consumption, the kind of LDUs that we need to use for startups and shutdowns, all will come into play.
Got it. Thank you so much.
Thank you. The next question is from the line of Dr. Gagan N. Jain from HRJ Investments. Please go ahead.
Yeah. Hello, everyone. I think, sir, you've answered most of the questions regarding to the balance sheet. Am I audible now?
Yes.
Yeah. So I just wanted to ask you, sir, like in the future, what are we doing for the car recycling businesses which are really coming up, battery recycling, the biogas? As you know, in this budget, they've said that biogas, they're going to add 25%, they're going to add. So are you looking at this verticals also? And what is the revenue and by what time can we expect these revenues to really materialize, if any?
So our first focus in this recycling segment is also end-of-life vehicle scrapping thing. We are looking at, currently we are in the process of identifying suitable land. We have already zeroed down on a couple of locations, in two different states. And we are also talking to one of the OEMs as a potential partner for this project. So I think if all goes well, I think by third quarter of next financial year, we should be in a position to announce this project. So that's our first focus. Second one is the tire recycling, which we want to actually set up in the same auto recycling facility. For that also, we are not looking for a partnership, but we already have identified the equipment for the same.
Mm-hmm. And sir, for the biogas?
The bio-CNG, more than the bio-CNG, we actually are looking at, as of now, our focus is to look at more waste-to-energy projects. Because we think that probably has got a better return on our efforts.
Okay. And sir, I'd just like to end by saying just one thing, sir. Actually, I think we have to publicize this business a bit and we have to make people more aware, because I think I agree with the second caller that the potential is high, but the communication thing is really which is troubling us. and it can really, make us fly if we can just work on that communication part and maybe, get into that battery and biogas if possible. You can look ahead for that and maybe, give some announcements and some future, plans so that, we can also, just work on that. Thank you.
Sure. I mean, what I would say that like the gentleman who said earlier, we can always have an offline discussion, take your suggestions and improve our communication narrative.
Yeah, because I think, that really makes the investor confidence really go up and, that will help, everybody as a whole, as a business also to grow, I guess. So thank you. Best of luck.
We'll be happy to engage. Yeah.
Thank you. The next question is from the line of Sandeep Salaria, an investor. Please go ahead.
Yeah, hello. Am I audible?
You are audible, sir. Please proceed.
Yeah, good afternoon, sir. So I've joined late, and pardon me if my questions have been already answered. So I have two questions. So I see the interest cost has doubled and depreciation has also increased by 50% in this quarter. Top line has remained that or degrown from the last year and a half, 2 years. So when do we see this top line growth coming back? And I also see in the past we had EBITDA margins of 25 to 26% range. When do you expect that? The interest cost and depreciation, are they going to go down in further quarters?
To start with, the interest and depreciation has kicked in because of the commercial start of the waste energy project. Till date, they were under capitalization phase, so that is why those were absent. Now that the plant is put to use, the sale of power has started, so the cost is now coming in. So we see these things to taper off over the next year or two. It's going to be gradual because these are 21-year projects. So the interest cost, of course, will taper off faster within the next 6 to 7 years. But the depreciation is going to be steady at these rates given the projects that we already have. The total revenue is flat primarily because the fall in the project revenue, which is the construction-related revenue, which has come down sharply from 64 crores to 30 crores in this quarter because the entire construction phase is done and dusted. But if you look at a core operating revenue, that's increased by 22%. So the fall in project revenue, which shows the fact that the construction phase is going off the schedule, is getting replaced by an increase in my core operating revenue. So as you mentioned, we will grow the company at core operating revenues by around 18 to 22% comfortably, given the underlying projects that we already have.
Okay, thank you. And I have a second question. So I see a lot of variation in our PAT due to these huge variations in our tax. Our tax ranges I've checked is range from 11% in one quarter to 35% next. So is there any specific reason we have large variations in our tax every quarter? And is there any way we can reduce this lumpiness in our EPS and tax percentage? Because it gives electric shocks to investors every time we see this.
I agree. The lumpiness is primarily due to administrative reasons at the municipal corporations because of the absence of elected members. Since the approval for escalations are not coming in a timely fashion, that is why we are seeing a lumpiness in the revenue recognition and the booking of income. And that is also reflective in the receivable cycles. Once things stabilize, once we have elected members in all the clients that we work with, this thing will be streamlined. So if you were to look at our financial numbers pre-2022, that was a steady state of affairs. There is a steady kind of numbers coming in, which is very predictable in an annuity kind of a model. Post-2021, where most of the clients don't have elected members, we are seeing a significant delay in decision-making authority. We hope post-May or June, when the elections are over and we have elected members in most of the municipal corporations by the third quarter, things should be back to where it was a couple of years back.
But does this relate to tax as well? Because tax I see a huge variation.
Rejoin the queue for follow-up questions. Thank you. The next question is from the line of CA Shivam Parak from ValueWise Wealth Management Services. Please go ahead.
Hi, sir. Good afternoon. So I wanted an update regarding the dividend policy of the firm. And second question is that you told that you were interested further in the waste to energy projects. So are we in a potential talks with some municipalities regarding waste to energy? So these are my questions.
Yes, of course. I mean, that's why we are talking to several municipalities. But as you know that municipalities need to tender out these projects, and the next 3 months everyone would be under the election fever. So that's why, but we expect that many of these municipalities will launch their waste to energy tenders by the end of this financial year.
Okay, sir. And sir, update on the dividend policy?
So the board is very cognizant of the dividend point, and given the fact that the company is currently in the growth stage, the board is aware for the projects to stabilize the DSCR and the interest coverage ratios to be stabilized once, and then they will initiate on the dividend policy. Okay, so sir, 2-3 quarters or 4th quarter down the line, can we expect some dividend announcement? I think board has already been aware of this point, and they are definitely working on the same principle. So we would expect the board to inform the management on the policy on this aspect. Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Rohit Maheshwari from Tata AIG. Please go ahead.
Hi, sir. Thank you for giving opportunity to ask question. So my question is related to a collection and demolition debris. 1,200 crores is a maximum potential revenue in 20 years, or there is an upside to this number?
No, the C&D waste, we were talking about an annual revenue of about 30 crores per year.
Okay.
It's a 21-year concession. So we expect that this tonnage also will increase over a period of time. Plus the tipping fee also will get escalated as per the tender condition. So that's the potential upside.
So the maximum revenue per year will not be more than 60 crores, correct?
Approximately that should be the ballpark, assuming tipping fee and sale of byproducts put together.
Okay. My second question is, like, if I see an annual tax rate, for an example, if I see the 9 months for this financial year is close to 27%, so going forward, that should be the number we should estimate in our model, correct?
Couple of variables, the tonnage always keeps swinging, but yeah, around 20 to 24% growth in our core operating is a number that, based on the underlying projects that we have, should be baked in, and the EBITDA should be in line with what we have reported now.
No, sir, I was talking about tax rate. The tax rate, what we should consider on an annual basis, should be between 25 to 27%, correct?
That should be a very good assumption.
Okay. Thank you, sir. Thanks.
Thank you. The next question is from the line of Ketan R. Chedda, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. So, sir, given the nature of our contracts, which are pretty much long-term contracts, and based on the projects that you have, ramped up and started ramping, would you be able to give a guidance for Q4 and FY25?
For Q4, our core operating revenue would be in the range of around 200 to 210 odd crores. I mean, that is a number that we are comfortable with. This is, again, I'm talking about the core operating revenue. And for FY25, around 20 to 24% growth is a safe assumption currently. Looking at the way the tonnages and everything is coming in from the projects that we handle, I think this is a number that we are working with internally.
20 to 24% growth rate.
Yeah.
Sorry, did I hear that correct? Is it 20 to 24% growth?
20 to 24.
22 to 24. Okay. Yeah. And the next question is, in this Q3 revenues, do we have any contribution from C&D revenues, or C&D revenues have not kicked in yet?
Not yet, because the project is under construction.
Okay. Do we expect them from Q4 onwards?
From quarter 1 of next year, yeah.
25. Okay. Thank you so much. Thank you.
Thank you. The next question is from the line of Utkarsh Somaya, an individual investor. Please go ahead.
Yeah, thanks again. I had a question. Just wanted to ask you, from your discussions with the municipal corporation officials, what is the sentiment regarding municipal solid waste collection, recycling, given that globally the sentiment is very bullish on this sector? Just wanted to understand from your conversations, is there any sense of urgency? And yeah,
from the point of view of municipalities and these officials, they are extremely now finicky about improving their ranks in this Swachh Bharat Abhiyan ranking, the city ranking, cleanliness ranking that Government of India has. You must visit some of these cities, and then if you talk to some of these officials, they actually seriously want to improve the collection efficiency, want to have most of their waste processed, and actually work along those lines. So that's why we see that in terms of business opportunities, there are endless opportunities, because not only the big metropolitan cities, even the tier 2 cities are now actually allocating a much larger part of their budget towards SWM activities, which is a huge positive for our business.
So wherever government has actually intended to spend a lot of money, for example, in the power sector and defense, and they have really gone all guns blazing. So do you see this sector to really see a lot of allocation from the government, or a lot of spending from the corporations, and thereby do you see a lot of tenders coming, sizable tenders? And yeah, size of the tenders also, if you can kind of speak about what kind of sizes.
First of all, I must say that the order of magnitude of the power sector or the defense sector is very different from these kind of waste management business, because even a large power plant will be talking about 2,000, 3,000 megawatts of power. Right here, we are talking about municipal waste. The largest would probably be like 20, 25 megawatts. So we are talking about a different scale. But within that scale, we see many opportunities and many cities coming up with more and more such projects. So to answer your question about the increased funding which is available, Swachh Bharat Abhiyan actually has capex funding for funding the capex portion of some of these collection transportation contracts, the processing projects, even for the viability gap funding, which is required to make some of these projects commercially viable. Mm-hmm. So, which in itself is a huge improvement. But as I said, don't compare the scale or the order of magnitude. But if we compare with what the business was 2 years ago or 3 years ago, we see a quantum jump.
Thank you so much. Can I fit in one more question, if you don't mind?
Yes, please.
Yeah. Can you speak about your margin profile of the 3 segments you have, and going forward, do you see the revenue mix changing between the 3 segments?
Yeah, so normally we don't comment upon the segment margins over here, because that's slightly more sensitive, given the fact that it's a very competitive industry and it's on a price bidding kind of a range. So we normally don't comment on the margins, activity-based margins.
Yeah, but talking about the mix, I mean, if you see historically, our C&T business was about 60-65% of the overall revenue. Going forward, in the next couple of years, we want to make it at least 50-50, if not more, in favor of processing projects. So that's one. Secondly, we are also very keen to increase our non-municipal revenue, because as of now, only sale of compost or RDF, which is about 2% of our revenue, is non-municipal. Going forward, with the addition of some of these value-added products from the C&D projects, the construction delivery projects, and commissioning of these auto scrap or the tire recycling projects, we want to at least increase that revenue to 5% in the next couple of years. That's the business plan or the target that we have set internally.
Okay, noted. Thank you so much, and best of luck.
Thank you. Ladies and gentlemen, due to time constraints, we will take that as the last question. I would now like to hand the conference over to Mr. Jose Jacob for closing comments. Over to you, sir.
I want to express my sincere gratitude to our dedicated team, whose unwavering commitment has been instrumental in achieving our objectives. I also extend my heartfelt appreciation to our esteemed clients and stakeholders for their steadfast support. Together we have built a strong and successful company, and I am confident that our journey towards a cleaner and a greener future will be characterized by ongoing triumphs. Thank you, everybody.
Thank you. On behalf of Antony Waste Handling Cell Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.